Summers are usually when air conditioning sales pick up, and Blue Star, as one of country's largest cooling system manufacturer, gains from a spurt in sales. This time around too, we have seen the sales from the unitary segment, at least, of the company going up, but it's the other segment actually which has dampened the earnings. So let's get a better picture from the joint MD of the company, Mr. B. Thiagarajan, who joins us on the show now. Hi, Mr. Thiagarajan. Good afternoon to you, and thanks a lot for joining us today on Bloomberg Quint. You did manage to escape the slowdown when it came to the unitary segment. We have seen a growth there, but it is the EMP segment and the commercial AC which did not pick up during the quarter. Also, your margins have seen a decline this time around to 7.3%. Tell us what led to this decline, because I was looking at the cost of raw materials. That as a percentage of sales has risen significantly on year-on-year basis.
Good afternoon. Thank you for talking to me. The results may be seen as somewhat muted, but actually the real story is not that at all. So I'll go segment after segment. The electromechanical projects business actually has done well in terms of order booking. Our order book as on 30th June was rupees 2841 crores, which was 34% higher than what it was last year. Orders continue to flow in, and I think we will end the year with an order book of around rupees 3000 crore, while the execution also will happen at great speed in the coming months. In Q1, our priority was to preserve cash, and therefore we went slow on execution. Our liquidity is something which we felt is important, and we have to tighten that given the market conditions. We did on that front extremely well. As you will know, some 403 crores of borrowings in Q1 last year. It came down to a surplus cash of around 1 crore. And in fact, in March, it had come down to 205. We further reduced the borrowing and we came to a surplus cash position. This was a very conscious decision we took given the market conditions. The second part, the cooling products, actually we had great summer season. We grew in room air conditioners by around 25%. While the market would have grown only by 22%, we gained market share, marginal market share even by growing faster than the market. It is the refrigeration products. We had to take a decision for migrating to certain new platform products. As you're aware, we are setting up a new factory in Wada where we had excess land for deep freezers. That factory will get commissioned in about 8 months' time. As a prelude to this, we had to redesign the products on new platform and new refrigerants which are sustainable in nature, and also we wanted to introduce inverter technology in the deep freezers. So this led to a temporary slowdown that is pertaining to only Q1. We were debating which is the right time to do it. We felt that when room air conditioner business is peaking during this period, we will take that decision of slowing down execution of refrigeration products. On the whole, there is nothing to be worried about. Order inflow continues to be good, and the raw material prices are, as you rightly pointed out, it is stable, and it is also good that the exchange rate is stable. So this particular margin issue is also impacted by the advertising expenses. What would have happened in March had happened in April and May, because the winter was continuing even in March in quite a few parts of the country. We compared with last year, we shifted that. That is precisely during the IPL and World Cup period, a lot of money was spent, and that amounts to around 18 crores of rupees. So therefore, the results may be seen as subdued and not up to the expectations, but there is nothing to worry. It is a Q1 aberration. I do not see any problem going forward. Having said that, whether the consumption demand decline across the country in many sectors. Will it affect us? We have to wait and watch, but I am optimistic that we will do well.
So, Mr. Thiagarajan, since you're expecting the coming quarters will be good, what sort of guidance that you can give us on the top line and also on the margins which were impacted in the first quarter? Do we see them moving higher in the coming quarters?
Margins will move up. Margin guidelines, I will tell you that the segment 1 should be somewhere around 5.5%. and segment 2 should be 9.5 to 10. The segment 3, we have been always saying it should be somewhere around 15%. So as far as the top line growth is concerned, I mentioned to you that it depends on the execution speed and the cash availability, including today's announcement with regard to some NBFC liquidity improvement program, etc. must help. We will not be pushing the top line unless and until our working capital is under control. And I think we can expect anywhere between 10 to 15% growth in the revenue overall.
15% growth on the top line. So you're looking to do somewhere about 6,000 crore, considering you did about 5,200 crore last year. Just one more word, Mr. Thiagarajan. There was some subsidy received for your facility at WADA of about 21 crore in the current quarter. Is there any more subsidy that will be received in the coming quarters?
No, not at all. This was a long pending item, and while in the other income the property sale was not there, this particular part was available, and out of this we have received around 14 crores of money already, and we will I do not foresee any other subsidy that is due.
Okay, we'll leave it at that note. Appreciate you joining us today, and all the best to you for FY20.
Thank you very much.
Well, that's the management of Blue Star, which came out with its earnings yesterday. The stock's not doing too much, but on year-to-date basis, at least it's given you some returns at a time like most of your stocks in the broader market have been reeling under pressure. In today's trade, it's down 1 to 1.5%, and the guidance that they have given is a growth of almost 15% on the top line. And for the quarter gone by, they did see their order book growing by about 33%.
Okay, now should you sit on cash or cautious?